Yeah, I'll tell you, the interest rate complex is wild, just like equities. Now, if you look at the first chart, this chart starts on the 9th of December, which means we've had 9 consecutive sessions in a row on the 10-year where the yields on any given day are higher than the previous day. That is building momentum. We've talked about it, and it's been a great technical indicator. 2's10 spread, the steepest, the widest, going all the way back to mid-22. That speaks volumes about the market's anxiety on inflation. And finally, the dollar index on pace for another record close going back to the end of 2022. But maybe the most interesting story is all that volatility in equities and what it may mean. And for that, we're going to go talk to Chem. Hi, Chem.
How you doing, Rick?
All right, yesterday was one of those days where the equity markets went wild. Now, so did interest rates. But when we spoke, you had a good explanation that I think viewers would be quite interested in.
It's a perfect storm. Not only are you getting the inflation and the catalyst, but it's important that it's DES OPEX. It's the biggest options expiration.
So option expiration, and we have a Greek tragedy here. Beta, theta, okay, go on.
Options expiration is the biggest one. These leaps have been on the board for years. Ton of open interest in the put side. So what happens when all of a sudden you get a big catalyst, you start moving, all of a sudden people need to cover risk. And that was a lot faster than people expected. A lot of short covering, on these options.
So they were basically selling futures to neutralize some of the exposure they had on the option side.
There was a lot of put selling dimes, 20s that went up to $5 on that move. When that happens, that creates a margin call issue. So people have to cover that risk. That expires tomorrow morning. So a lot of that relief is what you're seeing here in terms of the push up as those things are coming down. But until that comes off the board, you have this volatility pressure.
So they see that opening price and then we're pretty much done tomorrow.
That's right. But the big catalyst is still there. So don't think this is necessarily over. The structured flows that we've been seeing that have been supportive are fading. They're going away. And as that starts to fade, you're likely to get more and more selling here into the next
I used to love expiration days. There's a whole nother game. So even though that opening price kind of is the end of the game, you have till when to decide if you actually want a position in those options, take delivery. So you can play the game, seeing where the futures market, the cash is, then decide, okay, I want that position, or let them expire worthless, correct?
That's exactly right. And the AM print is critical tomorrow. If we're stable through it, which it looks like we will be, you'll get a little bit more support. But then Friday, Monday, after that initial support, now there's a whole new ball game. So a lot of those hedges come off as well.
Right. Okay, now, how should we look at the rest of the year with respect to we're beyond the big expiration? Is there any dynamics going into the end of the year under the Santa Claus and the turn that we should be aware of?
There's a re-leveraging effect into the end of the year that should still provide some support, but this interest rate inflation story is the story. As we go into the election, there's going to be a lot of risk off. People don't want to wait and stick around for what might happen to accelerate some of those forces. So I think that stagflationary forces, which you and I have talked about for some time, are going to be at the heart of all the conversations.
Excellent, Chem. Always fun to talk to you. Be careful on the big expiration. Watch that opening price tomorrow. Remember, you have a bit after that to decide if you want the position of your expiring options. Kelly, back to you.
Rick and Chem, thank you so much. We appreciate it tonight.